Hey everyone, welcome. It is November 7th, about almost 4.5 hours after the close of the market. I apologize for not being able to make it live today. I just had a lot of things that popped up really unexpectedly that I had to take care of. So we'll get everything done right now in the recorded version, and there's a good amount to go over. Maybe a little bit shorter than normal because not a whole lot happened in the markets, but some interesting things did develop. So this is the S&P 500. This is how we traded intraday. I added a couple of these blue lines right here that are some interesting levels to observe other than the three purple lines that I drew in the pre-market session. One was the MA50, which was very close to the Friday low, so I just added those together. I have the previous close, which is very close to this purple line. They could have been the same line, but I just distinguished them so you could see that I was actually considering the previous day close as well. And the Friday high was right here in this blue, and then I have the MA90 above us. So we can see that we traded down and we started inside this purple range, and then we broke out, and then we came back, pulled back and tested it, and then we really broke out. So here's where we really want to start paying attention, over in this region right here. So how would we know that this is a better breakout or a true breakout? Well, here we had a big bar and a large surge in green, but we sort of had that right here too, and it didn't really pan out for us. So I'd be looking for an even larger bar and an even larger green bar, especially since this is after first half hour. I want to see if we get something this size that is interesting after maybe the first hour, after the rush of opening trades happens with the institutions and retailers. So mostly retailers, some institutions depending on their specific institutional role. So let's play this forward a little bit. Let's see if I get this right. There we go. And here we go, we get another green surge and a large bar, and this time I'm not just crossing this purple line, I'm crossing the Friday high, and that is significant. So I've already broken above this level, pulled back, and now I've broken them up even further. That's going to be my first indication that we can surge further upwards, and here we do, and we just keep on going until I see that indecision bar right, or pullback reversal bar right here. So that would have been a little mini surge, but again, this was not a lot, and I wouldn't have day traded this. I would said that today was probably going to be muted range, and we would probably avoid day trading because of that muted range, or if we were going to do it, we would do it in Tesla or something else that was more volatile. So let's take a look at the entire day once again and see how this played out. And you can see that it continued to move up, it pulled back to this previous Friday height, and then we bounced off of that level again, revisited at the end of the market, and closed very near that, or actually a little bit above that Friday high. We bounced off of it again right at the close. So that is a very significant level, that Friday high that we saw, and we did get a little bit of trading action here, and we did break out higher. We did form a new high, so that is no longer an inside day bar, but we'll take a look at that in the daily chart. What I want to notice here though is, even though it looks like we got some trading range right here, it's actually not that significant. You see that here we traded about 0.7% was the daily range, and what was yesterday? Yesterday was 0.58, 0.6. So it's basically the same ballpark range. So even though it looks like we moved significantly higher, we didn't really compare. Yesterday, we just had reasonably the similar amount of movement. And if I look on Friday, you can see that, what am I doing? So Friday included a gap. So I need to take that gap into account as well. So here we can move 1.3%. So that was a lot more significant, about double of what we're seeing these last couple of days. when we look on the daily chart, what we see is that we did make that higher high. Like I said earlier, it's no longer an inside day. So we have optimism that we're going to continue to move upwards, but not necessarily an explosive move higher like we were saying that might happen if we continue to get inside day bars. So what we're looking at right now is we have 2 full days completely above that MA50. That is extremely positive news. We are a little bit below that MA90. Right now, though, I want to be very, very cautious because a couple of things happened over the past week and a half. Number one, we had these huge bars and 2 gap ups last week, making this a huge surge upwards all week long to get us above that MA50. That is a large momentum push, but it's also parabolic and gapping up and increasing size in bars. So normally when that happens, what we will expect is either a consolidation or a pullback. The other thing that's making me pause right now is, look at this. That's 1, 2, 3, 4, 5, 6, 7 up days in a row, and with significant movement upwards. We haven't seen this in a really long time. So here we have 1. Is this an up day? No. So see, even though this is a green bar, this is a minus 0.4% move from this bar to this bar. So this one is really 1, 2, 3, 4. 4 days in a row. How about this one? 1, 2, 3, 4 days in a row. How about this one? Just 3, 3, 4. And you can see that I can't really find any. So this is a downward move. So even though these bars are green, I wonder if I can change my, I don't know if TradingView has the bars, high-low bars. Nope, not high-low bars. Well, it's okay. We'll just do the normal candles. I'll figure it out later. But I can't find this many bars. In order to find that many actual up bars, see, like this one is actually down minus 0.11%, so this doesn't count. The last time I can find that many up bars is actually way back in November of 2021. Let's see where November of 2021 is. Right here. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7. That's the last time we saw it. And you can see that there is at least a pause. We really don't expect this to continue to keep on moving that strongly for such a long period of time without a pause or a down day, or at the very least a consolidation. This one was a consolidation over 4 days before resuming the upward movement. So and over here we also didn't have any resistance above us. We were completely above the moving averages. Over here we have that MA90 looming over our heads. We almost made it. Well, we came kind of close. I shouldn't say almost, but it was kind of close to it today. You can see that. So my expectation is that we will not immediately move above that MA90. We might brush up against it and pull back. We might get a red candle over here. We might get a green candle over here, but end up a little bit lower. I don't know. But I don't expect us to just keep this momentum surge upwards because it's too many days in a row of being up. And I haven't seen a huge amount of institutional capital get put to work quite yet. So I expect this to consolidate, maybe pull back to the MA50, which is really just being consolidation. Maybe it will pull back to that MA150 or that EMA20. That wouldn't be too surprising either. But and then resuming the upwards movement. So overall, still expecting that upwards movement, but just not busting through completely. It could if this market is super strong, but based on everything that I'm seeing, I don't expect that to happen. I believe the highest probability movement is going to be a consolidation, sort of like we saw in November 2021, 1, 2, 3 days of sideways movement, or mostly sideways movement, before we resume that upward movement and break up above that MA50. So that means I'm not going to go into any new positions quite yet. I want to wait for that consolidation period to play itself out, or at the very least, I'm going to wait for a red bar to come down to the MA50 and then enter there. Why? Because I'm going to get cheaper option prices, not necessarily because the option movement, not difference in price. So let's just say that tomorrow we have a green bar and we hit that yellow, and then the next day we have a red bar and we start from the MA90 and we close at the exact same price that we closed today. Well, the option that I would have bought on this day, even though it was at the same underlying price, the S&P was at the same price, my option is going to be cheaper, even if I take away the 2 days of time decay that we would get. My option would be cheaper simply because the implied volatility would be falling on the way down rather than rising on the way up, and my option price will automatically be cheaper because of that. So I'd much rather enter on a red bar day than on a green bar right here, especially since I'm expecting this to consolidate. If it breaks out, it breaks out. Then we wait for a pullback. It's not a big deal. We're just going to time our opportunities, give ourselves a little bit more advantage. So let's take a look at the QQQ and we'll see pretty much the exact same thing. 1, 2, 3, 4, 5, 6, 7, even stronger in the QQQ. This is really strong. Parabolic move into a straight, very high slope linear move upwards. This is really strong, and we don't see that very often. We can see that we are, what is this high? 373.58. This high was 373.74. Very, very close. We would just call this matching the high right here. So we've already matched this high right here. We don't expect, especially after such a strong surge, to just immediately bust through. It'd be normal to consolidate a little, maybe pull back a little before we bust through that ceiling and then start to challenge these highs over here. So basically everything I'm saying is that yes, this is still looking very much like a change in trend to the bullish side, but this is too much too fast, and we want to exercise a little bit of caution. We want to time our entries when it's a little bit more favorable for us, and we're going to wait for that pullback because it's too much too fast. So other than that, those are the most interesting developments in the markets today. Like I said earlier, it's a light economic calendar week. It's light on Fed. Nothing is crazy, nothing unexpected over here. The only thing that's going on here is there's a huge surge in momentum in the markets to the upside, and it's a little bit too much too fast, and we see, at least in the S&P 500, we see that dying off. We were getting smaller bars right here. We had an inside day. We had a similar range in prices today, even though we're slightly up. So we are starting to go into consolidation mode, and once we consolidate a little bit, then we can break out with some vigor and some energy. So that's going to be it for today. Tomorrow we'll wait and see if we're going to expect another low trading range day, and we're just going to wait. We're just going to wait until this consolidation period ends, or we pull back to a MA150 or EMA20 before we expect the upward trend to resume. All right, guys, I will see you tomorrow in the pre-market session.